Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. I hope you're having a fantastic day. Let's take a look here again at Bitcoin, the manic depressant Bitcoin here. Take a look at this. We zoom in a little bit further. We got this pretty aggressive price action here. The price shoots up within about 2 or 3 hours, 4%. Shortly after that, price drops 3.5%. Shortly after that, price jumps 5%. This is trash, folks. So just so you know, is not the most ideal trading conditions. So generally when you kind of see this kind of volatility, you want to kind of wait for some kind of stability here. Now today being a Monday after some CME gaps and stuff, we want to kind of make sure to pay attention to that. So if we do take a look here, just to clarify, there was a CME gap that has already been filled. Half the reason probably why we saw the price shoot up to 60,500, so right around that local point of control. But we had a closure there on Friday at roughly about 60,900, and the price wicked up there perfectly to exactly hit the top right there, roughly about 2 hours ago. So interesting stuff. All right, folks. So again, that's kind of where we're at here. This is the market that we're in. So if you don't like it, you may want to go take a walk or something. I don't know, or maybe do a lot more than that. Regardless of the fact, let's go ahead and take a look at some back of data to kind of see what's going on. If you are new to the channel, just ask you to go ahead and hit the like button, comment below, deeply appreciate that. Obviously you've been watching for a while, you're probably doing that every video and I deeply appreciate it. The important thing is to get this in front of more people so they stop getting destroyed and wrecked by the market. Future reference, heads up, I do have a Trading Academy community and signals group. We took a good 30% in the last 3 days from Bitcoin and an Aave short as well at 28%. Well, it's not monumental, these are just 5x leverage trades on altcoins and 10x leverage trades on Bitcoin. I never vary or go away from that. It's essentially always the same. And the key takeaway there for you, if you're kind of new, or just you've been watching for a while, good friendly reminder to always use the same amount every single time you trade. That way you get used to winning or losing the same, and it doesn't feel any difference, and you can kind of build a realistic trading portfolio based on that. Anyways, let's take a look here. We can see a massive amount of liquidation, billions of dollars, about 53,400. Those are some long positions there, low leverage longs, but they are still susceptible if the price were to pull back and lose its current support. Now, support level right now is somewhere in the range of 57, 58,000. We'll talk about that more here when we look at the charts, but easy way to understand it is that we are in a very volatile market. There's a lot of volatility, mainly just some liquidation at 63,000, heavy liquidation at 53,000 below. So it's a bit of a range, and if we do look at the macro, we can kind of see it reflected here. Coincidentally, there's a lot of liquidation just under 50,000. That's a ways away. Still a possibility, but if we take a look here, the more local, closer liquidation level is at 63K. That hasn't changed much. That is probably more likely than not going to be the next target. But once more, we got to kind of see how this next couple of hours treats us here. I mean, hypothetically, with the last 3 or 4 hours being up and down by 5% each push, I would be remiss if we don't see 63,000 or 50,000. It's going to happen. All right. So anyways, that's just kind of where it's at. Now, let's take a quick look here at the daily and kind of see what's going on. And generally speaking, at the end of the week, actually, why don't we start with the weekly first? Because today is Monday. It's good to get perspective on the week. First of all, we got this descending, broadening wedge, generally considered as a favorable, more bullish sign. So keep in mind, the likelihood of the price breaking to the upside is greater based on this pattern. Now, do you trade patterns specifically? No. Just like Elliott wave theory, you want to use it in combination with a lot of other things. If you're only using it alone, you're doing yourself a significant disservice. I am under the impression from some of my community members, there's other influencers out there solely using one trading theory, and I think it's very limiting. So just some friendly advice, make sure you diversify a little bit. It may not be best to bank everything on one theory. There's a lot of other things you want to kind of combine. So again, when we look at the weekly, daily, etc., we're looking at different time frames to extract different amounts of information, right? And a lot of them are based on these indicators that have been working for years. So just keep that in mind. And we do take a look here, of course, at RSI. It's right there at 50. Okay, when you're hanging out at 50 in the RSI, that's generally considered as a resistance because we're below it. But with us being above and below it so close, it kind of reaffirms that we're kind of in a support range. Okay, so the truth is, RSI on the weekly isn't telling us too much. It's not telling us it's good or bad. We can see, however, stochastic is swinging down, so we're obviously in a bit of a downtrend. So in order for that to shift its momentum, we're going to need to see higher highs and higher lows. So far, last week closed in a pretty significant bullish type of doji candle, so that's a good sign. So far this week, a little too early to tell, but the general consensus here is that we're over the 50-day SMA, and to me, that's a very positive sign. Speaking of Elliott wave, we're to look at the larger picture here. There's decent propensity here for a further continuation past 74,000. I think the macro still looks very favorable in that regard. But between now and then, there's going to be a lot of price action moving up and down quite violently as we've seen here so far. So just be mindful of that. Just because the likelihood of the price going up from here is greater, doesn't mean you just blindly take along with the 100x leverage right now. Okay, that shouldn't be a thing. That should never enter your mind. What should enter your mind is adding to your spot bag consistently every time the price goes down. That's a different story altogether. Again, me personally, I'm more of an investor than I am a trader. I trade to invest, if it makes any sense. So again, to each their own. So let's take a look here at the daily time frame. We can recognize that we're getting rejected by all the moving averages, right? 200, 50, 20, 100. I mean, it's all right there between 61 and 63K. Or sorry, 64K. There's a reason why that resistance wall at 63K is pretty strong, because there's a ton of confluence at that point, right? A lot of confirming factors. We do take a look here. We're still under 50 on the RSI until we break back up above. I'm not convinced Bitcoin's back on track. Okay, that's again just me personally. I put a little more weight maybe than I should on the RSI, but it's proven to be very beneficial for me over the years, and I can tell you that it's a good indication of where we're at. MACD and stochastic RSI are swinging up, but they look like they're kind of topping out or plateauing, which makes sense, right? We've seen about 5 days of divergence, so that's standard and that's normal. Again, the problem here is we had this really ugly candle on, what was it? That was on Thursday. I guess, I mean, I wouldn't say it's ugly, but 55K up to 63K, like that's obnoxious. That really shouldn't have happened. And again, it all happened when I was sleeping. I think that's the reason why I'm frustrated by it. Just complete honesty. Anyways, what I'm getting at here is that we have some confirming factors that, the momentum is shifting, but it also is mostly letting us know that we're diverging here. We're rejecting out of this specific key level resistance, and with money flow index being fairly low, there's not like a lot of reasons why the price action should just instantly recover and continue higher from here. Once again, we're entering a support range at this 0.382 fib level. We'll make sure our fib levels are up to date here as well, which they pretty much are if we take the most recent low to the most recent high. We can kind of summarize that the price does come back any further. 0.618, this $54,000 range should be an area of support. That's strictly long-term. I don't think we're going to see that right now, but the truth is we very well could, right? We just saw a 5% dump, 3.5% pump, and a 5% dump after that. Like, this is really obnoxious trading, and it's very difficult to kind of trade into that. Again, if you're a day trader, it may be a different story altogether. Even if, actually, honestly, if you were a day trader, this would be challenging. It's very, very tough to manage those ebbs and flows, at least with the high leverage traders that we have nowadays. What I'm getting at here is a 4-hour time frame. If we look here a little closer, we can see we're again kind of hanging out at that 50 level, right? Generally, when you see the price action kind of hanging out at 50 on the RSI on daily 4-hour time frames, it really just kind of it tells us that there's not a lot of confirmation the price is going to either A, break through that resistance, or B, be kind of reliable indicator, if you will. Because when you break above or below the RSI, it's helpful to recognize kind of the momentum shift, right? For right now, we came from below, we kind of came up to that level and rejected. So to me personally, I don't really see that as a positive. It's mostly a diverging type of situation, and with us being below a majority of the key levels here for the simple moving averages, I think we're probably more likely to see the price pull back. Again, if we look at the 200-day, sorry, that's the 20-day SMA, we're getting rejected by that here. We can see we've lost our ascending trend line, and it's common for the price action to retest that as a bearish backtest effectively, and then pull back, okay? So I think that with that happening, essentially, and we combine that with this local point of control at about 60,700 being the top here initially for this little run, I think we're probably more likely to see the price either A, stay range bound between 57 and 61K, or B, the price continues lower, it continues to establish lower highs, and we see the price kind of channel out to the downside. Okay. Again, a lot of things can happen, honestly, but I'm not seeing a lot of beneficial signs here on any of the time frames, and a lot of the time frames are getting hit with that old reset button because of just how obnoxious this trading is. But if you look at this volume candle, how strong this volume is, you kind of combine that with the way the momentum is here, I don't think we're likely to see a significant uptick or continuation. Once again, I've totally been wrong in the past, and I'm probably wrong now, but I just want to kind of urge some caution to those who are trading right now. It's very important to be very careful in these kind of conditions. Truth is, we're below the cloud here. we have more resistance above us. The conversion line and the baseline are kind of intersecting there, and the lagging span's kind of getting close to the price action. So this is like 3 out of 3 reasons not to take a trade. And I know it's frustrating. It can be very frustrating because you're probably thinking, wait a minute, Friday you told me not to take a trade either. Yeah, that's the common narrative, folks. Good traders are going to be waiting on the sidelines while all this crap kind of just goes to the wayside. Until you have an established direction, there's really no reason to trade. And at this point, the bulls and the bears are just arguing and fighting and just kind of battling over this, 58 to 60K range. And it doesn't make a ton of sense to jump in. But that's just me personally. Again, you can do you, but at this point, I'd probably feel better off waiting a little bit longer. Keep in mind, we do have some fundamentals coming up this week. CPI I misspelled that. Core CPI on the 13th, which is tomorrow, and then CPI on the 14th. Rather, and the PPI is tomorrow. So again, those are 2 events that can absolutely lead to some interesting behavior. So just keep in mind, if you're not familiar with our Twitter, Telegram, or Discord, jumping over to that. Links down below if you're curious. I have that information there available for you. All right, folks. I hope I made sense with this. Thanks again so much for watching it. I know it's not really quite the answer you're looking for. I'm sure that's the case, but some days are like this. You just kind of gotta accept the fact that it may not be a good trade today, or more importantly, try not to force a trade. But if I were to gamble, which I'm not really much of a gambler, I'm going to speculate the price is going to go down a little bit further from here. This doesn't feel right. With a strong push up, so much resistance at that point of control there, it just doesn't seem sensible at this point. All right, that's all I got, folks. Thanks again so much for watching. Hope you learned something today. We'll see you the next one. Again, CryptoCache.tech is the site link down below if you're curious about joining our Trading Academy community or Signals group. We'll see you soon. Take care.